Okay, so this session is being recorded. Not sure, let me just share the application screen again. Okay, so can someone just confirm that you can see the application screen? So the application screen shows the question. Okay, so you can see the application screen. So you'll see that the revision for the final assessments, we have one question on leases and one question on financial instruments. Okay, so even though we have two questions here on two topics, it doesn't mean the other topics are not examined. Okay, we revised the other topics when you had your test 1, your test 2, and your test 3. So we're not going to revise them again, but they are still important. Okay, all the topics will be tested in your final assessments. So it's important that you study everything. Okay, we're just focusing on these last topics because we didn't really have a revision session on them. Okay, so let's have a look at this first question here. So TENS Pty Limited is a manufacturing company based in the Cape with a 31 March year end. The entity's processes are water intensive and profits are under threat due to the water shortages in the area. As a contingency measure, management have entered into an agreement to hire a water tanker for a period of 3 years from the 1st of April 2018. The following information relates to the agreement. So an annual rental of 61,780 will be paid on the 31st of March, starting on the 31st of March 2019. On the 1st of April 2018, the water tanker could have been purchased from the supplier for an amount of 300,000. They tell us that the present value of all payments to be made over the period of the agreement is 155,000. So as you go through your question in your assessment, it's important to highlight or take note of all the information they are telling you, okay? So they told us here that there's an option for TENS to purchase the water tanker at the end of the contract if the drought conditions persist. Management do not think they will exercise this option. So the water tanker can be used for a total of 4 years, after which it could be scrapped for 68,400. Management are unsure how to account for this agreement, as they have not entered into a rental agreement before this one, and they have requested your advice. Okay. So let's have a look at the required here. They tell us that if the agreement were to be classified as a finance lease, show how it would be presented on the statement of financial position of TENS as at 31 March 2020. They also told us to assume an interest rate implicit in the lease of 9.5% per annum. Okay, so who can tell me off the top of their head? They have told us it is a finance lease. Where would we present the lease of this item on the statement of financial position? Okay, so remember your statement of financial position, it shows your assets, it shows your equity, and it shows your liability. So if we treat this item as a finance lease, where are we going to show this? What items will it affect in your statement of financial position? So are we going to show the water tanker? Are we going to record the water tanker as an asset in our books? So we are looking at it from the perspective of TENS. So TENS is renting this, or it has entered into a lease agreement. Okay, thank you. So yes, because this is a finance lease, the water tanker is going to be shown and recorded as part of our PPE, okay? And if we are recording this water tanker as part of our PPE, will we depreciate the water tanker in the books of TENS? So we're recording this water tanker. Are we going to depreciate it? Yes, we are. That is correct. Thank you, everyone. So we agree that we're going to record this in our assets under our PPE in our statement of financial position. But think about it, where are we going to show the other side of the transaction? If we record it as an asset under our property, plant, and equipment, surely we need to have a corresponding credit. If you think about this in journal entry terms, okay, we're going to debit our PPE. And then what are we going to credit? So when we're recording our PPE, we'll go debit property, plant, and equipment, water tanker. What are we going to credit? Okay, we are going to credit our finance lease liability. That is 100% correct. So remember, when we look at our liabilities can be broken down into those that are current and those that are non-current. Okay, well done. So let's have a look at our statement of financial position, and we'll go through how to calculate the amounts. Okay, hopefully you can see this and it's not too small. We'll go through the amounts together, and then hopefully we can get all of the amounts together. Okay, I have tried to zoom in. Hopefully that's big enough for you. Okay, let's just go to the top. So remember, you all agreed that we were going to record this water tanker as part of property, plant, and equipment in the books of tens. So how are we going to record it? At what amount? So remember, if you look at the information in the question told us that, I'm just going to go up here. So the lease started on the 1st of April 2018, and the required has asked us to record the amount in the statement of financial position at 31 March 2020. So do you agree, when we are looking at our statement of financial position, we're not only going to include the 31st of December 2020, we also need to show the comparative year being the 31st of March 2019. Okay, sorry, I might have said December, but the year end here is 31 March 2020. So we now want to record this water tanker under our non-current assets. Who can tell me, under a finance lease, what are we going to record our lease asset as? Are we going to record it at the fair value of 300,000 given to us in the scenario, or are we going to record it at the present value of the minimum lease payments of 155,000? So yeah, we have our present value of minimum lease payments being 155,000, or they told us that the tanker has a fair value of 300,000 at the commencement of the lease. So what are we going to record this water tanker at in the financial position of tens? Okay, correct. We're going to record it at the present value of the minimum lease payments of 155,000 Rand. And the reason for this is that the leased asset under a finance lease, it needs to be recognized at the lower of the present value of the minimum lease payments or fair value of the lease assets at the inception of the lease. So because the present value of the minimum lease payments is lower than the fair value, we will record this water tanker at the present value of the minimum lease payments. Okay, so you all agree, our initial recognition is to record the water tanker at 155,000. But my question is, what about depreciation? Remember, the statement of financial position, it shows the balance of the water tanker at the end of 31 March 2019. We would have had this water tanker, we would have recorded it for a full year and used it for a full year. So we also need to provide for depreciation. So if we just go back up to the question, what is the useful life we are going to use for this asset? So let's have a look at the information they gave us. They told us here that the rental agreement has been entered into for a period of 3 years. Okay, so the rental agreement is for 3 years. They told us, though, that the water tanker can be used for a total of 4 years. So the rental agreement is 3 years. However, the useful life of the water tanker is 4 years. They told us that it could be scrapped at the end of its life for 68,400. But they also told us here there is an option for tenants to purchase the water tanker at the end of the contract if the drought continues. However, management do not think they will exercise this option. So management has decided at the end of the lease term, they are not going to buy this asset. So what is the useful life that is appropriate for us to use? So if management are not going to buy this asset at the end of the lease period, essentially it is only going to use this asset for 3 years. So do you all agree that the useful life that we need to depreciate this asset over is 3 years? Okay, so let's calculate the amount in our statement of financial position. Okay, so if we have a look at our working here for 2019, we agreed we were going to record the asset at 155,000 because this is the lower of the present value of minimum lease payments and fair value. Then we said, well, we're looking at our balance on our PPE at 31 March 2019 being our comparative year. So we have used this asset for 1 year. So we need to provide for our depreciation at 1 year over here. Okay, so if we take our PPE of 155,000 and we divide it by 3, we will get our depreciation for 1 year. And then we need to take that off of the cost price to get the carrying amount of our asset. So do you all agree, once we have taken the depreciation into account for 2019 being the first year of depreciation, this is going to result in a carrying amount of 103,333. Okay. So you guys all got the 3 years. Someone is asking about the residual value. So why is the residual value 0 here? And the reason is that the leasee isn't taking ownership at the end of the lease term. So what is the amount that the leasee is going to pay at the end of the lease agreement? They are paying 0. So essentially they are not taking ownership of the item at the end of the lease. So the residual value in this case is 0. So if you're confused about this, you can just have a look at the lease lecture slides. This is outlined on page 18. Okay, so the residual value basically in this case is the amount that the leasee expects to pay at the end of the lease term. So have a look at slide 18. Because the leasee is not going to pay anything at the end of the lease term because they're not taking ownership of this water tanker, it means the residual value in this case is 0. Okay, so it's important to look at, is management going to take ownership of this asset at the end of the lease period? So have a look at slide 18 in your lecture slides in week 1, okay? Have a look at slide 18 and it tells you that if management's intention is to take ownership of the asset and they pay an amount, then it tells you what to use as your residual value. But basically in this case, your residual value is the amount that the leasee expects to pay at the end of the lease term. So if I ask you in this question, what is the amount the leasee is going to pay at the end of the lease term? And the amount is 0 because they are not taking ownership of the asset. So in this case, it is appropriate for the residual value to be 0. Okay. So someone is asking, where did we get 2 from? So there's many ways you can calculate the carrying amount. You can go 155,000 divided by 3 to get your annual depreciation, and then you can take that amount and net it off the 155,000. Or you can go 155,000 divided by 3 times by 2, because there would be 2 years remaining, and this would give you the carrying amount of 103,333. Okay, so you can either go 155,000 divided by 3 times by 2, and that should give you the amount over here. This represents your annual depreciation, and then you would multiply by 2 to get your carrying amount, because you still have 2 years remaining. Okay, or you could go 155,000 divided by 3, and that will give you your annual depreciation, and then you would multiply that by 2. Okay. Okay, so are you all happy with how we calculated the amount for 2019? Maleka, do you have a question here? Maybe you can type it in the chat box. I recommend looking at your attempt against the solution here and then seeing where you went wrong. Maybe the residual value you used was incorrect. Okay, Ms. Gna, ask yourself, what are we trying to do? So in 2019, we are simply trying to calculate the carrying amount of the PPE. So what is the carrying amount? It is cost minus your depreciation. So if we divide by 3, because our useful life is 3 years, then it means that that is our annual depreciation. But if I ask you how many years useful life is left at the end of 2019, there's 2 years remaining. So we multiply it by 2. If we're dividing by 3 and then multiplying it by 3, we'll get the cost, which isn't a true reflection of the value of the asset. Okay. Someone is asking, since we're assuming it's a finance lease, it still remains at 3 years. Well, the useful life is 3 years, but we need to depreciate this asset. So the useful life is 3 years, but to calculate the carrying amount, the useful life was 3 years at the beginning of 2019, or beginning of the lease period. But because we've used the asset for 1 year, at the end of 2019, when we're looking at our statement of financial position, we only have 2 years useful life remaining. Okay, so let's move on now to calculate the depreciation, the carrying amount of the leased water tanker for 2020. So if I ask you, at the end of 2020, how many years have we had the water tanker? So remember, we entered into this lease agreement on the 1st of April 2018, and now we want to report the carrying amount in our statement of financial position at 31 March 2020. So who can tell me how many years have we had the lease tanker in use at the end of 2020? How long have we had the lease tanker in our company to use it for? Okay, correct. We have had this water tanker for 2 years. So now if I ask you, how many years should we have depreciated this asset at 31 March 2020? We need to show depreciation for 2 years. Do you agree? We have had this lease water tanker for 2 years. We need to show depreciation of 2 years. Okay, so what are we trying to calculate here? We are showing our carrying amount of PPE. What is our carrying amount? It is our cost less our accumulated depreciation. So do you agree our cost, if you look at the workings here, are 155,000 less our depreciation for 2 years. So in order to calculate your depreciation for 2 years, you're going to take the cost of 155,000 and you're going to divide it by 3 years, because that is our useful life in this case. And then you're going to multiply that for 2 years. And that is going to give you your depreciation for 2 years. In order to get your carrying amount, you're going to take your cost of 155,000 less your depreciation for 2 years. And that is going to give you a carrying amount over here of 51,667,000. Okay. So do you agree that because the useful life in this case is 3 years, we have used the asset for 2 years? So how many years is remaining to depreciate this asset by? So we got the asset and we said its useful life is 3 years because we're not going to take ownership of the water tanker at the end of the lease period. It's appropriate to use 3 years. Then you all said that we had this item for 2 years. So we really only have 1 more year to depreciate this item. And if you look at this amount, the carrying amount is reflective of the last year of depreciation. So this amount will be depreciated next year, basically. Okay. I hope that all makes sense. So this is basically our finance lease liability. It has been recorded under our property, plant, and equipment. We have depreciated it because our property, plant, and equipment needs to be shown at our carrying amount, which is what we've done. Okay. So if you are all happy, now would be a good time to look at the other side of the entry. Okay. When we record our finance lease liability in our journal entries, you go debit PPE. What do you credit? Remember, you mentioned that we credit our finance lease liability. So let's go down to our finance lease liability and have a look at that. Okay. So remember, when we look at our finance lease liability, we need to calculate a table that shows the interest payments and the lease payments. Okay, so the calculation for the finance lease liability is a bit more complicated. Can you all see the amortization table there in the comments? I'm going to try zoom in on the amortization table just so we can go through that calculation first. Okay, it's going to be very difficult to calculate the balance on your finance lease liability without doing your table over here, your amortization table. So let's have a look. So we started the lease at 1st of April 2018. So we want to know, at our starting point, we recorded PPE at 155,000. We would have gone debit PPE or lease asset water tanker. And we also needed to credit our finance lease liability. Okay, so at the beginning of the lease, we would have credited our finance lease liability with 155,000. But now this liability is going to be paid off over 3 years. And while it is being paid off over 3 years, interest is going to be incurred on your finance lease liability. Okay, so what they told us in the question there, that the interest rate implicit in the lease is 9.5%. So we had this finance lease liability on the 1st of April 2018. At the end of the first year, on the 31st of March 2019, because it is a liability, we need to record interest on the finance lease liability of 9.5%. So if we look at the opening balance here, the opening balance on our finance lease liability is 155,000. So we need to record interest at the interest rate given of 9.5%. And if you do that, you will get interest of 14,725 Rand. Okay, so do you agree when we incur interest on a liability, it makes the liability bigger? Okay, so we're going to go opening balance plus our interest, and then we need to subtract our payment. So as the lessee, we have use of this asset, but we make an annual payment. And they told us in the question that there are going to be 3 equal lease payments of 61,780. Okay, so our liability was 155,000 plus the interest of 14,725 less our lease payment of 61,780. So if you take your opening balance plus your interest expense less your lease payment, that will give you a closing balance on your finance lease liability at 31 March 2019 of 107,945. Okay, are you all happy with how we calculated that? We're going to take our opening balance on the finance lease liability, which is the same as what we recorded our asset as under PPE. We're going to add the interest expense that we calculated because that makes the liability get bigger. And then we're going to subtract the lease payments, and that is going to give us our closing balance. Okay, and this represents our finance lease liability at the end of March 2019. Okay, so now we're going to repeat this to complete our table. So our closing balance at 31 March 2019, that will become our opening balance here. Now we want to record or know what is the amount of our finance lease liability at 31 March 2020. So again, we have interest we need to calculate. So we're going to take our opening balance of 107,945 and we're going to multiply that by our interest rate of 9.5%. And that is going to give us interest in Rand terms of 10,255 Rand. Okay, and you all agree we have our opening balance on the finance lease liability. Our interest is making our liability bigger. Okay, it is like a loan. We were loaned this asset, and as a result of that, we have a liability, and interest is going to be charged on this liability. Then again, we have a lease payment. Okay, our lease payment in this situation was given to us as 61,780 Rand. So this lease payment is going to make our finance lease liability smaller. So if we look at our closing balance, if we look at our closing balance over here, we are going to calculate our closing balance at 31 March 2020 by taking our opening balance of 107,945 plus our interest of 10,255 Rand less our payments of 61,780, and that is going to give us a closing balance of 56,420 Rand. So the 56,420 Rand, this represents the amount of the finance lease liability at the end of 31 March 2020. Okay, then remember this lease agreement is for 3 years. So the closing balance at end of March 2020 is going to become our opening balance. And then we are going to use this opening balance again to calculate our interest for the last period of the lease agreement. So we're going to go 56,420 Rand multiplied by our interest rate of 9.5%. This will give us interest of 5,360. And remember, because it's a liability, this is interest expense. It is making our liability bigger. So we're going to go 56,420 Rand plus interest of 5,360 less our lease payment of 61,780 Rand. And if you take your opening balance plus your interest less your lease payment, you'll get a balance on the liability of 0. Okay, so this just goes to show at the end of the lease period, your lease payments would mean that you don't owe anything at the end of the lease period. Okay, are you guys all happy with how to do this table and how to do this calculation? If you can't do this table, then it's going to be very difficult for you to know how to record your finance lease liability. Okay, so let me ask you this. In the world of liabilities, there's two kinds of liabilities, okay? We have to classify our liabilities as either a current liability or a non-current liability. What is a current liability? What is a current liability? Who can write in the chat box? What is a current liability? Think of your non-current liabilities and your current liabilities. They're obviously different because they're classified separately. So what is a current liability? Who can type in the chat box what a current liability is? Okay, so a current liability is that portion of the liability that is going to be paid in the next 12 months. Okay, that is correct. So therefore, if a current liability is payable in the next 12 months, then surely a non-current liability is that portion that is only going to be paid after 12 months. Okay, so we said a current liability is that which is going to be paid in the next 12 months. Therefore, a non-current liability is that which is going to be paid after 12 months. Okay, so now let's use these principles and complete our finance lease liability in our statement of financial position. Okay, so do you agree that our finance lease liability, it needs to be split into our non-current portion, that which is going to be paid after 12 months, and then we need to show the current portion of our finance lease liability, that which is going to be paid within the next 12 months. Okay, so if we look at our table, we are trying to complete the finance lease liability for 31 March 2019. Okay, so we are going to then go to our table that we looked at, and we are going to highlight this amount in orange. Okay, let's do blue. So do you agree that the closing balance on 31 March 2019, this shows the total of your finance lease liability? This will include the total balance of your finance lease liability. In this amount is your current portion and your non-current portion. So we now need to split this amount of 107,945 Rand. We need to split this into our current portion and non-current portion. And how are we going to do this? Okay, so a good way to do this, if you have calculated this table, is to compare this amount, your finance lease liability at 31 March 2019, compare that to the balance of your finance lease liability at 31 March 2020. Okay, so if you think about it, this is showing the finance lease liability at the end of March 2019. Then the 56,420, that is the amount of your finance lease liability at the end of March 2020. So what is the difference between these two numbers? So the difference between these two balances of your finance lease liability represents the portion that was paid between the two periods. Okay, and remember I asked you, what is a current liability? Your current liability is that which is paid within the next 12 months. So then if I ask you, if I show you that this 56,420 highlighted in yellow, this is smaller than that balance. So the balance is getting smaller. So if we take the difference between these two numbers, it will give us the portion that was paid between these two periods, and that will represent your current liability. Okay, does that make sense? So if we say our finance lease liability at 31 March 2019 was 107,945 Rand. Okay, we want to know what portion is current in here. And remember, you said the current portion is that which is paid within the next 12 months. So if we then subtract next year's finance lease liability balance, the amount, the difference between the two numbers represents the amount that was paid, which represents your current liability. Okay, so let's have a look at your closing amount here on your current liabilities. So if we take the difference between these two amounts, the 107,945 less 56,420, that is going to give you a current liability of 51,525 Rand. So this represents the portion in your 107,945 that is current. This amount is going to be paid within the next 12 months. And if you want to do a check, if you go 107,945 Rand less your current portion, you will get the balance here, which is highlighted in yellow. So that can be done as an extra check. So that 107,945 Rand, that represents your total liability. Your aim here is to split it into current portion and non-current portion. You said the current portion was that which is going to be paid within the next 12 months. So if we then look at the next year's balance of the finance lease liability, the difference between these two represents the portion that was paid between these two periods here. So in actual fact, that represents the current portion. So if you go 107,945 Rand less the 56,420, which is the balance of your finance lease liability in the following year, this will give you the current portion of 51,525. So this is your current portion. You guys are happy with that, okay? So once you know your current portion, now you can calculate your non-current portion. So we have our current portion here of 51,525 Rand for 31 March 2019. You know your total finance lease liability and you know your current portion. So who can tell me what the non-current portion is? Who can tell me what the non-current portion is for 31 March? Okay, so your non-current portion is the difference between your total finance lease liability of 107,945 Rand minus your current portion. That will give you your non-current portion, which is 56,420. Okay, you can see that this amount is actually this because it represents your non-current portion. What is your non-current portion? Your non-current portion of your finance lease liability is that which is going to be paid after 12 months, okay? Which is exactly what this amount represents here. Okay, well done to everyone that got it. Let's now have a look at 31 March 2020. So we have looked at the balances here for 31 March 2019, and we calculated the total amount of our finance lease liability in our table. And then we said we needed to split that between that which is current, which is going to be paid in the next 12 months, and that which is non-current, which is going to be paid after 12 months. Okay, now we're going to do the same for our finance lease liability at 31 March 2020. So we have our amount over here, which represents the amount in yellow represents your finance lease liability, your total finance lease liability, okay? So now this usually represents a current portion and a non-current portion. But remember, this lease period is for 3 years. So if we look at the balance, okay, who can tell me what portion of this, what portion of the 56,420 is considered current? So this closing balance here of 56,420, it includes our current portion and our non-current portion. So at this date, we only have 1 year left of our lease agreement. So do you agree that this total finance lease liability of 56,420, all of this is actually current? And the reason for that is that there's only 12 months left on our lease agreement. And at the end of the lease agreement, our finance lease liability is going to be 0. So in the next 12 months, the total amount of the finance lease liability of 56,420, all of it is going to be paid, which means all of it is going to be current in our statement of financial position at 31 March 2020. So if the current portion is 56,420, then our non-current portion is actually 0. And that is correct because all of our finance lease liability is going to be paid in the next 12 months. Okay. So here we have our non-current liabilities, and we have our finance lease liability. This represents the non-current portion, and then under our current liabilities, we have finance lease liability again, and this represents our current portion, that which is going to be paid in the next 12 months. Okay, are you guys all happy with that? It seems confusing, but if you do a table and then you systematically work through the table, I know for a fact that you guys can all get this right. Okay. So it's important that you just do a table. It'll be very difficult to do this calculation without a table. So I highly recommend doing a table and then talking yourself through the table to fill in your statement financial position. Does someone have a question? Okay, no question. So let's go to the next required then. So the first required was to classify the lease as a finance lease and then show it on the statement of financial position. If we look at required 2 says if the agreement were to be classified as an operating lease, prepare the journal entries that tenants would need to pass for the reporting period ended 31 March 2019. So now we have an operating lease. So do you agree that an operating lease needs to be accounted differently to a finance lease? When we look at an operating lease, are we going to record the lease asset as an item of PPE? Under an operating lease, are we going to record the lease asset as an item of PPE? You can tell me in the chat. Okay, you are all correct. Because it is an operating lease, we are not going to record this item, this lease asset, as an asset under PPE. Are we going to depreciate this asset in our records? So in the records of tenants, are we going to depreciate this asset and show depreciation when we classify it as an operating lease? Okay, correct, we're not. So we don't record the asset and we don't depreciate this asset. Okay, it is recorded differently. So the required is asking us to prepare the journal entries that tenants would need to pass. So let's have a look at our journal entries and see how it is different to the journal entries for a finance lease liability. So let's go to our journal entries here. Okay, well, before I go there, maybe you all had a sneak peek. Who can tell me what the debit and credit would be to record this lease in the journal entries? So we will have a debit and we will have a credit. Remember, we are looking at it from the perspective of the leasee. So the leasee is leasing this item, we're not going to record it as an asset, and we're not going to depreciate it. So what are the journal entries to record the lease in the books of Tense at 31 March 2019? Can you please mute your mics if you're not going to talk? Okay, so what are going to be our journal entries? Someone is saying debit your operating lease expense and credit bank. Do you all agree with that? Are you in agreement that that would be our journal entries? Yes, it would. So remember here, we are not recording the lease asset. We are simply accounting for this transaction as if it is a lease, nothing more. We don't take ownership of the asset. We don't record the lease asset in our books, okay? So we have a rent expense amount, which is going to be paid, and this amount is going to be paid out of our bank account. So we are debiting our rent expense and we are crediting our bank account. So who can tell me what is the amount of the journal entry that we are going to do? So they told us over here in the question, they said, just trying to find, oh, there we go. It says an annual rental of 61,780 will be paid on the 31st of March. So every year for the period of the lease, which is 3 years, an amount of 61,780 is going to be paid. So what is the amount of our journal entry in this situation? So we've agreed that we're going to debit our lease expense and we're going to credit our bank. What is the amount of our journal entry? Okay, correct. The amount of our journal entry is 61,780. Thank you. Okay, so let me just go to the journal entry and... Okay, so you guys all got that correct. My question is, why is there no need to straight line the rental lease payments in this scenario? So remember in some other scenarios in the lecture slides, you would have calculated an average lease rental, and then you would have calculated the average, and then you would have straight lined the rental lease payments. But why are we not doing that in this situation? Okay, so the answer is that it is a fixed payment. It is not changing. Do you agree that in some lease agreements, the payment is going to be increased? And then if it is increased, we will need to assess, is the escalation rate different to the inflation rate? So if the escalation rate is different to the inflation rate, then we will need to calculate and record our rent expense on a straight line basis. However, if our escalation rate is equal to our inflation rate, the rent expense is going to be recognized as it is given in the lease agreement. Okay. In this case, it's a fixed payment, so there's no changes in our lease payments. So we can record it as is by going debit rent expense, credit bank, and we've recorded it at 61,780 Rand. This is the lease payment. Okay, are you guys all happy with this? So this is the end of our first question. Let's now go to our second question in our revision. Okay, so let me just go down. So the next question is on financial instruments. Okay, this is a question from, I think it was test 2 from last year. Okay, so we have a company here called Hula. So Hula is a property development company based in the East Rand. The company has the reporting date of 31 December. During the current year, the following transactions took place. On the 1st of March 2018, Hula obtained a loan of 3 million from Capi Bank. So the loan bears interest at 8% per annum, which was the market interest rate on that date. So the loan is repayable in 3 equal annual installments of 1,050,000 Rand on 31 December each year, with the first payment taking place on 31 December 2018. Okay, so they've given us this information. Now we need to have a look at the required. It says prepare the journal entries to account for this transaction in the books of Hlula for the financial reporting period ended December 2018. Okay, so we need to record these journal entries. And then required 2 says present this in the financial statements of Hlula for the financial reporting period ended 31 December. Okay, so let's have a look at the journal entries first. So who can tell me, when we look at these journal entries, okay, we need to show what is the loan amount that we are getting. Okay, so who can give me the first journal entry? On the 1st of March 2018, Hlula obtained a loan of 3 million from Capitec. How are we going to record that in our journals? There's going to be a debit and there's going to be a credit. Who can tell me what the debit and credit is to record this loan in Hlula's books that Hlula has obtained from Capitec? Who can tell me what the journal entries are?
I think we debit the bank because we was receiving the money.
Okay, and then what are we going to credit?
It's loan payable.
Okay, and what is the amount here?
I recorded it as 3 million.
3 million, perfect.
Yes.
Well done. Okay, let's go have a look. Does the rest of the class agree with that? Okay, so we're going to debit our bank. This is amounts that the bank is giving us into our bank account. So we're going to debit bank and credit loan payable, okay? And the amount is 3 million rand. Okay, do you guys all agree? That is 100% correct. Okay, thank you very much for that. Now, remember, if we go back to our transaction, so we recorded our loan in the books of Hlula. Now, the loan bears interest of 8% per annum, which was the market interest rate on that date. So what is the journal entry to record the interest that is going to be owed on this loan? Who can tell me what the debit and credit is and what the amount is? So we're going to have interest on this loan. And we need to record this interest expense in the books of Hlula. Who can tell me what the journal entry is? What is the debit and what is the credit and what is the amount?
I debited interest on loan, interest expense. I credited bank.
Okay.
With 8% times by 3 million, which is 240,000.
Okay, perfect. And then what did you credit? Okay, so it really depends. Is the interest going to be paid annually, or is the interest going to accrue on the loan balance? Usually the interest will accrue on the loan balance. So we're going to go debit interest expense, which is 100% what was said. And we're going to credit our loan payable. So the interest is going to be charged on this loan, and the loan amount is going to get bigger. And how do we calculate this interest expense? We're going to take the 3 million and we're going to multiply it by 8%. Now, my question is, did we have this loan for the full year? No, we didn't, okay? This loan was taken out on the 1st of March 2018, and the year end of the company is 31 December. So how many months did we have this loan for? How many months are we going to have interest accruing on this loan?
It's 10 months.
10 months, correct.
Yes.
So we're going to show interest for 10 months. So we need to make sure that in our calculation we are counting for 10 months and not 12. So we're going to go 3 million times 8%, and that will give us an amount for 12 months. So we'll go divide by 12 times 10, and that will give us 200,000 interest. Okay. Now the next one we can do together. So we've recorded the loan, we're recording interest on the loan, which we've shown, but now we need to show that the loan is repayable in 3 equal annual installments of 1,050,000. So when we make a payment back to this bank, the loan amount is going to be getting smaller, okay? So we are going to pay this amount out of our bank account. So we're going to go debit loan payable because our loan amount is getting smaller, and we're going to credit bank because this amount is coming out of our bank account and it's going to go to the bank that gave us the loan. Okay, so our loan payments in this case is 1,050,000, which is the amount they told us in the question here. This is our annual installment. And this is going to make the loan smaller because we're paying off the loan. So we're going to go debit loan payable, and we're going to go credit bank. Okay, are you guys all happy with that? With the journal entries? If you think logically through it, then I don't think you'll have a problem, okay? Okay, let's have a look at the next required, if you're all happy. Okay, so here they show a table which is going to be used in the next required. So let's just have a look at the second requirement. It said present transaction 3 in the financial statements of Flula for the financial reporting period ended 31 December 2018. So we now need to show this amount in the financial statements of Flula. So let's just go to our financial statements. Okay, so thinking about this loan and the journal entries we just did, we are going to have to show the finance charges in the statement of profit or loss and other comprehensive income. And then we'll also need to show this amount in the liability part under your statement of financial position. So remember, just like the previous question where we had a finance lease liability, here we are going to have a financial liability relating to the loan. And again, we will have to split the loan into that which is non-current and that which is current. So it's very similar principles to the previous calculation. So I recommend we just have a look at a table here to help us determine what is our current portion and what is our non-current portion. So we said the opening balance on this loan was 3 million. And remember, we calculated our interest at 8% for 10 months. So our interest expense relating to the loan is 200,000. Then we have a yearly loan repayable amount of 1,050,000. So if we want to calculate our loan balance at 31 December 2018, we'll take our opening balance of 3 million plus our interest of 200,000 because the interest is making the loan bigger, less our payment of 1,050,000. Okay, so that will give us a closing balance of 2,150,000. So this closing balance at 31 December 2018, that will become our opening balance on the 1st of January 2019. Then we need to calculate interest again. So we need to calculate interest at 8% on the opening balance of 2,150,000, and that will give us interest of 172,000. So remember, in the previous year, we only had the loan in that year for 10 months. But in the 2019 year, we had this loan for 12 months. Okay, so we don't need to apportion it. We'll simply take the opening balance of 2,150,000, and we will multiply that by 8%, and that will give us 172,000 Rand interest. And remember, this interest is making the loan balance bigger. But then we have our loan payment of 1,050,000, and this is the amount we are taking out of our company's bank account, and we are paying to the bank who lent us this money. So this loan payment of 1,050,000, this is making our loan balance smaller. So then if we calculate the closing balance of 31 December 2019, we'll take our opening balance of 2,150,000 plus our interest of 172,000, less our loan payments of 1,050,000. And that will give us a closing balance of 1,272,000. So as you can see, this is exactly the same way we did it in the previous lease question. So it uses exactly the same principles, okay? So this table only shows the 2 years because that is the years we are going to show in our statement of financial position. Okay, so remember we said that the interest on the loan needs to be recorded as a finance charge or interest expense. What is the amount that we need to show at 31 December 2018 in our statement of profit or loss and other comprehensive income? What is the amount we need to show here under finance charges? So remember we calculated this as 200,000. So it's 200,000. Remember we calculated it by taking the 3 million multiplied by the 8% times 10 divided by 12. So this is interest of 200,000 that we need to report under our finance charges in our statement of profit or loss and other comprehensive income. Okay, so that is correct. Remember, when you're doing your statement, you'll need to make sure your heading is there and the company name is there. So just take note of this because you could be asked to complete it in a test or exam. You could be asked to put the heading or put the name of the company. So it's important that you know what is included and how to present your statement of profit or loss and other comprehensive income. Now let's have a look at our statement of financial position. Remember, this is an amount that the bank has lent us, so it is going to be shown as a liability in the statement of financial position of Hlula for 31 December 2018. Okay, so here they didn't ask you to do comparatives. So now we need to show this liability. We need to show the current portion and the non-current portion. Who can tell me what the current portion is going to be at 31 December 2018? So let's go to our table. So they show our table here. We calculated our closing balance. We have our closing balance of the loan payable at 31 December 2018. And then we have the closing balance at 31 December 2019. So at 31 December 2018, this 2,150,000, this represents your total liability. But remember, we need to split this into the current portion and the non-current portion. So who can tell me what the current portion is relating to this liability? So we need to calculate our current portion. Who can tell me what the current portion is? Or you can type it in the chat box.
It's 878,000.
Perfect. So our current portion is going to be the difference between those two balances. So the current portion is going to be 878,000 Rand. So we calculated that by taking the two closing amounts on our table. we took this amount being the total liability at 31 December 2018, and we subtracted the following year's balance. And the logic behind this is if we're comparing these total liability balances, the difference is that amount which has been paid between these two periods. And remember, a current liability is that portion that is going to be paid in the next 12 months. So if we compare these two balances, we know that the difference is that amount that was paid in the 12 months between these two periods, which represents your current portion. Okay, so now that we have our current portion recorded of 878,000, we need to calculate our non-current portion. Who can tell me what the non-current portion of this liability is? So our non-current portion is going to be that portion that we can calculate by taking our total liability balance of 2,150,000 less our current portion that we calculated of 878,000. So it is going to be, you guys are all very smart, it is going to be 1,272,000. Okay, all of you got it correct. Well done. Okay, so that is the end of this question. Do you have any questions you want to ask me relating to the two revision questions we have just gone through? Any questions on these two questions here that we have just gone through that you want to ask? No questions. Okay. Well, in that case, if there's no questions, then I think that is the end of this revision session. There will be a practical class at 3:30 where we go through the last practical question. So that is the second question on leases. So we'll have that at 3:30. And yeah, so I hope to see you all there. Someone said, please repeat the formula for the financial liability loan. Okay, so I'm assuming you're referring to the table here. So we have the table. So remember, in our table here, we'll have the opening balance of the financial loan. Okay, I will post the solution. We have the opening balance here of our financial liability, which is the loan. Then we have the interest at 8% of your opening balance for 10 months. That is 200,000. Then we have our loan payment here of 1,050,000. Okay, so we'll take our opening balance plus our interest expense, less our loan payments, and that will give us our closing balance over here at 31 December 2018. So then the next year, our closing balance will become our opening balance, and then we'll calculate interest again on that opening balance. So we'll go 2,150,000 times 8%. That will give you 172,000, less our loan payment of 1,050,000. So if we go opening balance plus interest minus loan payment, that will give us a balance of 1,272,000. Okay, so this closing balance here represents the total of your loan liability. So included in this amount is your current portion and your non-current portion. We said that a current portion is that portion that is going to be paid in the next 12 months. And your non-current portion is that portion which is going to be paid after 12 months. So we now need to split this into the current portion and the non-current portion. So if we compare these two balances, we've said that these two balances are the total loan amounts for these two periods. If we take the difference between these two balances, this represents your current portion of the liability. So if you take the difference So if you see, oh look, the balance on your loan liability is 2,150,000 at the end of 2018, but then you see at the end of 2019, the loan balance is 1,272,000. So the difference between these two liability balances represents that amount which was paid between these two periods, which is 12 months. So the difference between these two numbers is your current portion. And then if you have a look at this date of 31 December 2018, if the difference between these two amounts represents your current portion, then this amount represents your non-current portion the previous year. Okay, it sounds confusing, but it isn't really confusing. So then if you go down to your statement of financial position, so you'll see here that your current portion was 878,000, which is the difference between these two amounts over here, because we want to know what amount at the end of 2018 is going to be paid in the next 12 months. So if you take the difference between those two loan balances, that will give you a current portion of 878,000. Then the remainder, obviously, out of that balance is going to be your non-current portion. Okay, someone is saying, please explain how you calculated depreciation. Are you talking about this question on financial instruments or the previous question? Okay, because there isn't any depreciation in this question, so I'm assuming it's from the first question. Okay, so let's go to the depreciation. So in this question, remember we had our lease asset. And do you agree, you recorded this lease asset at a cost of 155,000? Okay, so the cost here, I'll break it down, is 155,000. That is the cost. Remember, when we record something under our assets in our statement of financial position, we are showing it at the carrying amount. What is the carrying amount? It is your cost less your accumulated depreciation. So are you happy that the cost in this question in 2019 is 155,000? So we got this asset, we leased this asset on the 1st of April 2018. We are now trying to calculate the carrying amount 1 year later at 31 March 2020. So what is your depreciation for year one? What is your depreciation for year one? Remember the useful life, we agreed the useful life is 3 years and the residual value is 0. And the reason for this is that the leasee isn't taking ownership at the end of the lease term. So do you agree that your useful life is 3 years? So we have our cost of 155,000. We are now trying to calculate our carrying amount at the end of year one. So we need to calculate depreciation at the end of year one. So our depreciation is going to be calculated by taking our 155,000, dividing it by 3 years. This will give us our depreciation for year one of 51,667. So that is our depreciation for year one. And because at the end of 31 March 2019, this year highlighted in yellow, we've only had the asset for 1 year. We've only leased the asset for 1 year. So we are only showing depreciation for 1 year. So do you agree? We are showing our lease asset at the carrying amount, which is your cost of 155,000, less your depreciation of 51,667. So if you take your cost less your depreciation, that will give you your carrying amount here of 103,333 Rand. So then if we look here at the second year, 31 March 2020, how will we calculate our carrying amount here? We are going to calculate our carrying amount by taking our cost, which is 150,000 Rand, less depreciation for 2 years, okay? So we calculated our depreciation for year 1 as 51,667 Rand. But remember now, at the end of 31 March 2020, we've had the asset for 2 years. So we are now going to calculate our depreciation for 2 years. Our depreciation is the same. We are simply dividing our cost by 3 to get our depreciation. So then if we take our cost being 155,000, less our depreciation for year 1 and depreciation for year 2, this will give us a carrying amount of 51,667. Okay, does that make sense? Okay, there are different ways you can calculate your depreciation. Like some students might have gone 155,000 divided by 3 times 2 for 2019. And for 2020, some students might have gone 155,000 divided by 3 times 1. So there's many ways you can calculate it, as you must do it the way you understand it. Okay, if you do it correctly, you will get the same answer. Okay, so that is the depreciation explained. So let me stop recording it. So the 2 is for the past years. So it depends which way you're looking at it. At the end of 2019, you've used it for 1 year. So you're showing depreciation for 1 year. But remember, your carrying amount will show the remainder. It shows what's left over after depreciation. So this carrying amount at the end of 2019, this shows that there's 2 years remaining of the useful life that will be depreciated in the future. Okay. So let me just stop recording.